Here's a shocking revelation. The U.S. job market might not be as robust as we thought. A recent revision from the Bureau of Labor Statistics, BLS, reveals that hiring was overstated by a staggering 911,000 jobs in the past year. But here's where it gets even more intriguing. This adjustment, though part of a routine annual process, comes at a critical juncture for the economy. And this is the part most people miss. It's not just about the numbers. It's about what they signify for the Federal Reserve's upcoming interest rate decision and the broader health of the labor market. According to a preliminary report released Tuesday by the Labor Department, U.S. employers have been adding significantly fewer jobs than initially reported. This update is part of a standard procedure where monthly job estimates, based on employer surveys, are cross-checked with more comprehensive state tax records. While such revisions are expected, this year's adjustment is particularly noteworthy. Economists at Goldman Sachs had predicted a revision between 550,000 and 950,000 jobs, while Treasury Secretary Scott Bessent estimated up to 800,000. The actual figure of 911,000 falls on the higher end of these projections, raising eyebrows across the financial world. But here's the controversial part. This revision comes on the heels of President Trump's decision to fire the previous BLS head last month, following a weaker-than-expected jobs report. Trump alleged, without evidence, that the agency was manipulating data to undermine his economic record. This move has sparked concerns about potential political interference in economic data collection, a cornerstone of transparent governance. Critics worry that the nomination of conservative economist E.J. Antoni, formerly of the Heritage Foundation, to lead the BLS could further politicize the agency. Antoni's confirmation by the Senate remains pending, but the debate over his qualifications and potential biases is already heating up. The timing of this revision couldn't be more critical. The Federal Reserve is closely monitoring labor market weaknesses as it prepares to decide on interest rates next week. With expectations of a quarter-point rate cut to stave off job losses, the revised data adds another layer of complexity to an already delicate situation. Meanwhile, investors seemed unfazed on Tuesday, with major U.S. stock indices remaining flat. Adding to the concerns, last week's Labor Department report showed tepid job growth over the summer, with just 22,000 jobs added in August and a net loss in June, the first since the pandemic-stricken winter of 2020. This latest revision is likely to amplify worries about the labor market's resilience, especially as the Fed weighs its options. So here's the question. Are we witnessing a genuine weakening of the labor market? Or is this revision simply a correction of overstated numbers? And, more importantly, how will political pressures on agencies like the BLS impact the integrity of economic data moving forward? Let's discuss. Do you think the BLS can remain impartial under the current administration, or is there cause for concern? Share your thoughts in the comments below.